All right, fam. Welcome to Elektron FX, and this is our evening session on our day 3 bootcamp. The topic of this evening is institutional candles and smart money concepts. Right? I think that this is one of the last videos. This is one of the last videos. All right. This is one of the last videos in this session. Right. So let us go right into the topic and then we call it a day, right? Now, when we talk about institutional candles, please, if you have not watched the previous video, we started from the pre-bootcamp, day 1, day 2. Now we're in the main bootcamp, day 1, day 2, and this is the day 3. All right. So I would like you to use a moment if you have not watched the previous video because you may not really understand what is going on, right? So let's go back to the previous video, then watch them and then do the assignments and then progress to this video. All right. Now, when we talk about institutional candles, we're referring to candles that have orders in them. Right. Now, let me explain the concept of institutional candles. Right. Now, for those of you that trade double tops and double bottoms, right, that trade support and exam, maybe you see the market's doing something like this, you know, I will show you with live examples. I'm not trying to illustrate it now. Right. Now, the markets form some kind of double top here, right? So you see the market reject at this point for about 2 times, right? So now you're seeing something like a double top here, right? See something like a double top here, right? The market comes here, rejects the first time, reject the second time, right? And then what happens next? You try to take a sell because you saw this rejection here, right? This is a resistance now. You saw another rejection here. This is not a resistance to you. And look at what the market does. The market does this. Maybe just reject a bit when you try to sell, and then it does this, takes you out, right? So it hits your stops, you know. When you take your trade, right, you know, you take a trade at a resistance, most often you will place your stop loss somewhere around there, maybe a bit below the resistance. That is for a retail trader perspective. And then why does the market now, why does the market do this, right? So when you put your stop loss here, look what the market does. The market stops you out, right? Stops you out and then starts selling heavily, right? You wonder why didn't the market just sell from here? Why did you have to do this? You know, just come and then continue selling down, right? Now, what happened there? Why didn't the market just sell as it sold here the first time? It just gave some kind of rejection here and then bought up, took out your stop loss, and then it's crashing down. You're wondering what happened? What happened? What happened? Right? That is where we want to dive in for this evening. That is the concept of institutional candles. All right, and it's one of the strategies that the smart money traders use in their trading. Right, I'll go to smart money very soon. But let us continue institutional candles. Right now, the goal of the institutions is to take money from the retail traders. Now, let me explain something. Look at this rate chart. Right, this is a rate chart now. Right, before this market moves from this point to this point, it means that sellers, people were willing to stake their money. Right. The market does not just move randomly, right? Before you see the market move from year to year, it means that people are ready to stake their money. They were ready to sell, believing that it's going to sell. So when people buy Bitcoin, they're believing what that is going to rise, it's going to go up. And then if they sell Bitcoin, they believe that it's going to drop. So now, each candle you see here, this is a 45-minute time frame, it is printed by money. All this candle represents people money because people money is what control the market. The people money is what make the market move from one point to the other. That means if there's no one willing to sell, this market is not going to go down. If there's no one willing to buy, this market is not going to go up, right? So the market is controlled by volume of orders, right? And I want to let you know this, that for the market to move, right? For the market to move, it means that someone is willing to put his money on the stake. That's what it simply means, right? So when you buy shares in a company, the company grows. Why? Because people are investing with them. That's the same way with trading. If people are not willing to invest or put their money maybe in a coin or whatever, it's not going to move, right? For example, we heard that Elon Musk said that he's not going to be using Bitcoin for Tesla. And what happened? The company pulled out of Bitcoin. And what happened? The market crashed because Tesla had some Bitcoin, or Tesla investors had some Bitcoin. And then what happened? They sold it, and what happened? It dropped all the way. It dumped. So the market is moved by people's money, right? So now let us understand institutional candles, right? Now, an institutional candle is simply that candle that goes against everyone else before reversing to the intended direction. I know you must have heard things like buy to sell, sell to buy, all those kind of stuff, right? So when we are talking about those kind of things, we are simply referring to the idea that there are people that actually take trades against other people before moving in their intended direction. And these people are called the smart money. That's what they are called. Those people that have the money to push price against everyone else. Let's assume that at this point here, people are trying to sell this market, right? They are trying to sell this market at this resistance. Maybe let's assume that the total money here, right? Because you know this smart money, they have the money to push price. The market, I told you the market is controlled by money, right? So what if, for instance, at this resistance here, people are willing to sell this market with maybe $3,000, right? People all over the world got the sell resistance here, so they click on sell, sell, sell. They think that it's going to go down, right? And now they sold $3,000. And now look at how smart money did. I told you smart money are people that have money to move price in any direction that they please. So let us see what they did. They now bought what with what 30,000. Okay, let me see that same figure. This is they came and they bought it $8,000 at that resistance. So you are selling, people are selling with 10,000, and then someone came and bought with 8,000. What is going to happen? This market is going to go against this one because the market is controlled by others. The higher the money volume, the higher the market will respond in your direction. So if I'm selling with $10,000 and someone else is willing to buy, though this is a resistance, it's going to go against me because he has more money to push price in his favor, right? So that is the concept of institutional candles. Now, who are the smart money or who are the institutions talking about? We're talking about the banks, right? The banks. We're talking about hedge funds. For example, they have the Bank of America. They have the Deutsche Bank, right? You can just go to Google and type the top forex traders by volume. You're going to see their names, right? Let us see if you can guess that. Top currency traders, right? I want us to just see the names of these people we call the smart money, people that make price to hit your stop loss before going the intended direction. Right? You can see them. Number one, you see JP Morgan. Is in the United States. They have 10.78% of the whole market. That means their money makes up about 10% of the whole market. You have UBS, we have SCS market, we have Deutsche Bank, we have Bank of America, and so much more. So these are the guys that actually move the market. All right. So what they do is that they move their market against other traders, because whenever you're trading, your goal is to make money, and you can't make money without taking money from other traders. So these banks or this institution, what they do is that they take, since they have the money, imagine owning 10% of the whole market, meaning that if the whole forex market is about $1 billion, that means they have about $100,000, right? That's 10%, right? So that they have the money. Sorry, if it's $1 billion, they have about $100 million. Imagine that is a lot of money, right? So these guys have the money to push price in whatever direction they please. So that is why these candles are printed. You see these candles that take out stop loss before going intended direction. That's why sometimes I don't like trading support. I don't like trading resistance. I want to trade it with these guys, right? The safest way to trade is to trade with the banks, to trade with the institutions, to trade with the smart money, right? So now I've explained what institutional candles are. They're candles that have orders to take price against everyone else and then go to the intended direction. They're called institutional candles, right? I don't want to there are different kinds of institutional candles, but I want to just stick to the major one, which is of the focus of this class. We have other ones like the smart money cube, we have the other blocks, we have the demand candles and all of that, but I want to just stick to the one that takes out stop loss, right? That is the one that makes you to cry, right? So you take a sell believing it's going to sell, and then the market does this, you wonder what happened, why did it hit my stop loss, and then it reverses, right? That is smart money playing their tricks against you, right? So now, why do all this happen? Now, all right, so let us look at Richard to see where this thing happened. Let us look at Richard to see if this thing is actually the truth. Well, is this actually the truth? Why do they really happen in the market, right? They really happen. So we want to check out and see if this is actually happening. Why? So look at Bitcoin now. Look at Bitcoin. Look what happened on Bitcoin. Look at this. So you can see that the market did this. Look at it. Can you see this? There was some kind of resistance here. Can you see this? Market tapped here first and tapped here. Look at what happened. Look at this candle now. This candle cleared everyone. Maybe if you took your sell here and maybe you put your stop loss somewhere maybe above, maybe a bit above here, maybe around it, look at, you would have been stopped out, right? And then it sold. Can you see that? This is an example of an institutional candle. Someone bought here, took everyone out before. Look after this buy, The market has been selling ever since. Look at this. It has been seen that after this push up, look at the market has been selling and selling and selling and dumping and dumping. So someone actually bought from year to year, took out everyone and then sold. Look at another example now. Look at this. Let's bring our resistance box. So look at this. Look at there's some kind of resistance here, as you can see. Some kind of resistance at this point here. Look what happened. Look at this resistance here. Right? You just see this clearly. This is smart money concept now. Right? Look at this now. See that there was someone that actually bought. Right? Look at this candle now. This candle just came and bought and cleared this whole resistance before what? Selling down. Right? So this is what we call the institutional candle. This whole candle from year to year, this whole buy move is someone actually bought to take out everyone else before selling. So that's what we call an institutional candle. I hope I've made it clear. Right now, what is the relevance of institutional candle and how can we trade institutional candles? How can we trade institutional candles? Right, this is one of the smart money concepts. I just want to mention this one and we call it a day. Right now, this is the rule of trading institutional candles. The first rule is that you must look out for the structure of the market. That means you must look at if the market is bullish, is it bearish, what is the structure of the market? That's the first question you ask. So whenever you want to trade institutional candles, you have to look at the structure of the market. Is it a bullish market? Is it a bearish market? Is it a ranging market? And all of that, right? So this is it. So let's assume that we had a bullish market, right? We had a bullish market. The market was trending upwards, trending upwards, trending upwards, trending upwards, right? And the market comes again and maybe just some kind of projection here, and then people that trade double tops will now say, okay, look at this, look at the structure of the market, look at this, all right? So there's also like a resistance here because markets came here the first time rejected and then came the second time and rejected. I'm showing you how to trade this thing now. So markets came here rejected. This is the higher high, higher high, higher low, higher high, higher low, right? This is your last higher low, right? This is not a higher low because it does not close above here. So now we have higher high, higher low, higher high, and this is not a higher low yet. So we now see what the market did. Now look what the market did now. The market came, maybe give some kind of rejection, and then look what it did. The market took out here. Look at this. Look at what happened. Just look at this. Look at this. Look at the market came the first time, give some kind of rejection at this point, came again, give some kind of rejection, and then look what the market did. The market pushed above, took out all these stop loss here. People try to trade double tops. There's a reversal pattern called double top. Let's say the reversal pattern that's called a double top, right? So it took them out, and look what the market did. The market took them out from the higher high, and look what the market did. It broke structure. What is a break of structure? When the market comes below the last higher low. So you can see higher low, higher low, higher low, right? Double top, took out stop, and then gave us that BOS, right? So we now have a break of structure here at this point because market was closed above below the last higher low, right? So now we have seen our break of structure at this point. What do we do? This is how you trade smart. This is how you trade the institutional candles. So when you see this push up that took out stop loss and then broke structure, what do? You look out for that candle that took out stop loss. That means you highlight that particular candle that took out stop loss, and then you play it. Now let me explain what happens in this concept. Now, when the smart money traders, when they take out stop loss, right? When they take out stop loss, when they do this buy position, right, is actually now in drawdown because when you buy, when they bought from here to this point, this whole move was in profit when the market was there. But when they now sold it down, imagine they bought here. Let us draw a line now. I want to explain this so you understand this thing. Imagine they bought around here, right? They bought here, and now the market was there. But if you buy here, a market is here, you're in profit, right? But when the market comes below your entry, you're not in loss, right? Remember that if the market goes in your favor, you're in profit. But now this buy position is now in loss because it has done what you want to do. The purpose of this buy was to take out stop loss, and then the market has now sold down, right? So this buy now is now in loss. This buy is in drawdown. So what did they need to do? They can't close their trade in loss because there isn't huge money to trade. So what did they do? They have to close their buy position before the trade continues, and this gives us our entry. So now the market has given you a bullish structure. We saw institutional candle, we saw break of structure, right? So we have seen our break of structure. What do? We look out for that candle that took our stop loss, and then we place our trades or our limits, or we plan our trades there. So the two ways to play this is that you can look out for the open of the candle or the 50% of the candle, and then you put your limits there, right? So you can measure from here to here. You measure 50%. That means you carry your where's my gun box? Oh, I don't have my gun box here. Okay, I have my gun box. So you can measure from here to here, measure from here to here. This is the move I took out stop loss, and this is the candle in drawdown. So you measure from here to here, target the 50%. You can put your sell limits here and your stop loss here above the 100%, right? So I can simply put my sell position here, right? So I can put my sell here at this point, my stop loss above this point, and then, right? So this is it. Stop loss above here, right? Right. So now you have seen this. Can you see this? Right. Can see this. Can you see this? Right. So now look at this. So you can put your sell because since this sell is in drawdown, they're going to go and close their position, right? So I can try to put my sell limits here, my stop loss here, and then you said the market is going to do this, right? The market is going to do something like this. You will simply come into that candle. They will not close their position in drawdown because this buy is in drawdown. This is in loss because they bought and then they sold, right? So the buy is in loss, but the sell is in profit. So they need to close their buy. So the market has to go up to give us what our lower high. Remember, this is a structure now. Remember, when markets break structure, it has to form a lower high. So you see the markets come into the 50%, or you can try to play the zero. If you play the 100, the open of it, that means your stop loss is kind of large. So you have your open here, your stop loss above here, and then your target will be or maybe the next low you can find. This should be the next low. This is the next low I can find. So just target the next low that you can find. It's somewhere around there. All right, so you can target here, right? Since the market crashed here, so you can target here for your take profit. So the market comes, activates you here, does some kind of projection here, and then market is going to do what? Sell down to where the next point of interest, which is here, right? So this should be your target profit, the last low that was formed, right? So this is how the trade in sooner candles. Wait for that market to give that push, take our stop loss, and then give us your break or structure or your shift in market structure, like SMS, right? So you have seen SMS here, and you have seen the move that took our stop loss, and you can put your sell limits here, with your stop loss above here, and then your target should be here. Now, the second way to trade this, if you don't want to use limits because you don't want your stop loss to be too large, what do? The second way of trading this, right? So you wait for the second way of trading this is that you wait for the market to come into that drawdown zone. And what do you want to see? You wait for what you call reaccumulation and redistribution. What do I mean by that? You want to see the markets come into this region and give you something like this. You see higher high, you know, market do something like this. Then gives you a break of structure here. You know, you want to see this same thing happen. You want to see break of structure in this region again. That means maybe on the 15 minutes or the 5 minutes. Now on the smaller time frame, the market is going to give higher high, higher low, higher high, then give you a break or structure by closing below this higher low. And what do? You enter when the market comes to give you a retest. That means the market is going to do this, give you a retest at this point, and then you can sell. You have a smaller stop loss here, and then you can now watch the market play out, and then go to the take profits. Right now, I want to reiterate that now. So the second way of trading, if you want to use limits, you wait for what we call reaccumulation or redistribution. And what do I mean by that? You want the market to come into this region, give you your break of structure and or your shift in market structure, and then rally down. You want to see the market give higher high, higher low, higher high, break of structure, you enter the sell retest, and then you take the price all the way down to the next liquidity region, which is what the next low you can find, right? The next support you can find. This is the next support I can find, right? So this is how to trade institutional candles, right? I hope you understand this. So let us just look out for maybe if I can find us one example on this, and then we'll call it a day. I don't want this video to be so long. Let me just look out for one example. If I can find us one on institutional candles, then we'll use it for our lesson. So let me go to 2 hour time frame to see if I can find something on institutional candles, right? Let me go back a bit. We'll see if I can find something on that. Right. All right, so I can see one example here. Let's see this example. I can see one on Ethereum USD. So look at Ethereum USD now. This is an example of an institutional candle. Right, look at this. Look at this. Look at how the market was rejecting here. Look at it. This is an always so perfect, right? Look at this. The market was kind of giving some kind of rejection here. Look at this. 1 rejection, 2. Market sold down. Look what happened. This candle came and cleared this stop loss. So when the market cleared this stop loss, look at this buy took out all this stop loss. Let me remove this. I can see it clearly. Right. So now this is our resistance. right? Some kind of resistance was there, right? If you draw it from this zone, so there's some kind of zone here, right? So look at this, some kind of resistance here. Look what the market did. The market came and cleared all these rejections here. Look at this. This candle took out all this stuff and then sold all the way down, breaking this structure, right? It broke this low and went down. Look at what happened. Now, remember what we said. When you see that institutional candle, you look at where the candle opened. So we measure from here, from the open to the 100. So we can break out our Gannon box, right? And then you measure from maybe the week, the down week, up to the upper week. Look what the market did. Look at this. After the market sold down, look what happened. The market came back to close this position in loss because this buy took out stop loss, right? Somebody bought here to take out stop loss and then sold down. So look at the market just came into this region and then tap it and then look at the massive sell. So that is how to trade institutional candles, right? I'm trying to see if I can see one more example on this and then we call it a day, right? So let me just see if I can find one more example on this and then we call it a day. Can't really find anything here. Let me just check some other charts. Let me check some other charts. All right, let's look at another one here. Look at this. Look at our resistance here. Look at the market sold from this point here, right? Right. So look at this. Let's zoom in a bit. This example is also provided. I just want to use cryptocurrency to do this. So there's some kind of support around there. What the market did some kind of rotation here, then bought, took out this stop loss, and then after the buy, what happened? It sold down, right? Remember structure. It must buy above, then break structure. What do you mean B.S.T? It went below this low. So we saw this sell down, it bought up, took out stop loss, and then rallied all the way down. What do? We measure that candle, took out stop loss. So we can now measure this is the candle, this is the candle, took out stop loss. Let's zoom in there so you can see it clearer, right? Look at this. The market did this, right? So you can now measure that whole candle and extend to the future. Look at this. Look what happened. The market just came into the open of it. Look at how it just tapped into the institutional candle, closed this position and loss, and then look at how it dumped. Since then, has been sell all the way down. Right? So that's how to trade your institutional candles. Just look out for that candle, took out stop loss, broke structure, and then you can play the open. You can play with the limits, or you wait for a break or structure on the smaller time frame. Right? If the stop loss is not so large, if the stop loss is not large, just use the limit. But if it's large and you want to wait for confirmation, you can then wait for the break or structure. So I want to end this video here. I don't want to be so long. If you want to learn more, do well to hit me up in my DM or join our mentorship program. Right? So let's just give one example. Right? So let's give one example. Identify just 2 institutional candles. Right, just identify 2 institutional candles and send to the group. Right, so that will be all for now. We're ending it right now. Right, so that's the end of the video. Have a wonderful time.